Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning. Welcome to Financial Issues. I'm your host, Shana. Thanks for tuning in today. Financial Issues is a ministry that helps to educate people about financial issues from a biblical worldview. You can partner with our ministry, and we certainly hope that you are, and you can get access to our biblically responsible investment strategy. You can find out more information at our website, financialissues.org. All right, folks. So on today's show, we're going to get you in the know, caught up on all of the week's economic data and market data. We'll also have our stewardship verse of the day, and it is Rapid Fire Friday, so our phone lines are already open. If you want to be the first caller in the queue, 610-363-1110 is the phone number. You can dial in now. You'll be the first caller in the queue, and I hope we get to talk to a lot of you today.
Yeah. Shana's fun to talk to, folks. Call in.
That's right. So at Financial Issues, we help you to stay in the know about the financial issues of the day. We help keep you abreast of what's happening in the economy and the markets and help you understand how we believe that impacts your own financial issues. So several takeaways. It's been a big news week this week for economic data. So for the week ending January the 31st, 2025, we started out on Monday with news on Deepseek, which was a Chinese AI company that released the latest version of their product that they claim to be smarter, cheaper, and more energy efficient than its U.S. competitors, mainly OpenAI. That news rocked the markets as the Deepseek app became the number one downloaded app on the Apple App Store. And as AI stocks that have appreciated in price so much, as the clear leaders and beneficiary of the AI boom got humbled this week, we saw the likes of NVIDIA down 13%, some of the other, AI darlings down a good bit too, actually down 20 and 30%. Early and midweek, but have sort of recovered. So Deepseek has also been accused of distilling, or that really means kind of stealing OpenAI's technology to train their model rather than originally creating their own product. At the end of the day, it is cheaper to take somebody else's work than to come up with your own.
The old copy-paste move, right?
Yes. But, that's sort of how competition works. You build on the successes of the past. So there's a balance there. But, with Deepseek being in China, that is a huge risk and a huge red flag as well. So at the end of the day, there will be competition in the AI race, and there should be. Free market, as long as there's free market, honest competition, that is a good thing. AI innovation will continue. It will get cheaper. It will get better. That's just how the free market system works. The beneficiaries now won't just be chip makers and data centers. Productivity increases should start to filter into many other sectors as these costs come down. So, you're looking at companies being able to successfully integrate AI into their business models will give them a huge advantage, and that will broaden out the who the beneficiaries of AI will be in the business sector. So although the initial spike may be over, there's still plenty of room to run for a lot of the AI leaders in the long term. And we do have a long-term strategy. So, we don't let these little hiccups in the market really dictate major changes in our investment strategy. Also, big news this week, the Fed's interest rate decision. The Fed had their two-day meeting that they have about every 6 weeks, and they announced that there will be no change to the overnight rate. It will be held steady at 4.25 to 4.5 during the January meeting, and that was in line, very much in line with expectations. It came as no surprise to just about anyone. The central bank has now paused its rate cutting cycle after 3 consecutive reductions in 2024 that started in September of last year that totaled a full percentage point with a half-point kickoff to the rate cutting cycle. Powell said that they are now not in a hurry to cut again unless the unemployment rate jumps from here or inflation shows shows an increase, which it doesn't really appear to be on a downward trajectory. Inflation seems kind of stuck where it is. But Powell doesn't necessarily speak for everyone on the FOMC committee. Chris Waller recently said that we could see rate cuts sooner than maybe the market is pricing in. Now, that certainly puts Waller in the good graces of President Trump and maybe in a good position to potentially take Jay Powell's job as chairman of the FOMC committee when Powell's term ends in May of 26. But Powell does stay on the board, or has the opportunity to stay on the board as long as he chooses, until January of 28. Now, Powell stated that his belief that current monetary policy is still at least in check or from moving too much higher. He said that the Fed funds rate is, quote, meaningfully above the neutral rate, even though he doesn't know and no one can really know what the neutral rate is. So Powell still indicates a bias that he wants to cut rates, but won't be moving in that direction until he feels like the data fully justifies that kind of move. Rate odds for a March cut, which is the next meeting, is at 20% versus 32% yesterday morning. So very widely expected that the next cut in interest rates probably won't happen until summertime. Policymakers noted that recent indicators suggest that the economic activity has continued to expand at a solid pace, although not quite as solid as previously thought since the GDP numbers were revised down. The unemployment rate, the committee says, has stabilized at a low level in recent months, and the labor market conditions remain solid. Additionally, the central bank acknowledged that inflation remains somewhat elevated and removed its previous reference to ongoing progress toward that 2% target, but also said that there were no plans to adjust or abandon that 2% target. The Fed also said that the economic outlook is uncertain and is attentive to risk to both sides of its dual mandate, which is price stability, keeping inflation under control, and full employment, keeping unemployment low. GDP, the first look at the fourth quarter, came in a little bit lower than expected. The U.S. economy expanded at an annualized 2.3% rate. That's the slowest rate in 3 quarters, down from 3.1% pace of growth that we saw in the third quarter of last year. Considering full 2024, the economy grew by 2.8%, the numbers are telling us so far. And the economic growth that we've seen under President Biden has come in a big way from government spending, AI CapEx, and upper income spending, rather than the kind of organic, broad growth that comes in a healthy and efficient economy with little government intervention. We are now at a pivoting point, hopefully, where the Trump team will lead us into rejecting the notion that government is God, that government is the provider of everything that we need. It's the government job to create jobs, so on and so forth, and to control every aspect of our lives. PCE data came in this morning. That is inflation data, the December data for personal consumption expenditures. That's what PCE stands for. And it is the Fed's preferred inflation gauge. It showed an increase of 0.3% from November and a 2.6% annual pace of increase. The headline month-over-month number came in as expected, up 0.3 of a point, but that was hotter than last month. Headline year-over-year, PCE up 2.6%, higher than last month's 2.4% pace of increase. That is the third consecutive month of no progress, hence the term what we're calling inflation sticky at this point. Core PCE came in up 0.2% month over month. Year over year, it remained unchanged at a pace of rate of increase of 2.8%. The focus Next month, we have a 0.5% monthly read that drops off. So if we can stay under that in the month of January, we'll see more progress in the number. Supercore, which is the Fed's one of the Fed's focus, is looking a tad bit better and seems to be in support of a disinflation trend. Personal income and spending. Income came in as expected at an increase of 0.4%. Spending came in stronger than expecting, 0.7%. We'll get to the market news a little bit after the break. I didn't quite get it all in the beginning of the show. The phone lines are open, though, so if you still want to be the first caller in the queue, 610-363-1110 is the phone number. I'm your host, Shana. We'll be back right after this break for more financial issues.
How is Timothy Plan continuing to lead the fight as you guys now enter your fourth decade of leading this fight of biblically responsible investing?
We've been too silent for too long, and we can no longer be silent. You stand up, like Ronald Reagan said, we're only one generation away from losing all of our liberty. Yeah. It has to be fought for. I wish it didn't. And you can fight for it. You don't need guns and ammunition and that. You can fight for it, especially with your dollars, because it's always about the money. And when the money starts impacting people, they start paying attention. When we launched this, they said it couldn't be done, but here we are 30 years later. They said you couldn't get competitive returns, but here we are.
What a tremendous testament of God's grace.
Go to financialissues.org/Timothy Plans to learn more about Timothy Plan.
In a time when children are facing unprecedented challenges, the gospel stands as the greatest source of hope. At Crossroads Kids Club, we have the incredible opportunity to bring the message of Jesus into public schools nationwide. Join us in sharing the life-changing hope of the gospel with the next generation. The need is urgent, but God's love is powerful. Together, we can offer Christ's love to children who are longing for it. To join us, visit reachOurschools.com. That's reachOurschools.com.
Hearing Jesus say, "Well done," how to secure you have the best life forever. And that best life forever is being able to access the plethora of wonderful escalating rewards that are elucidated throughout the book of Revelation to those who overcome. Well, that's what the book's about, friend.
Order your copy of Hearing Jesus Say Well Done today on Amazon and start living for what truly matters.
Welcome back to Financial Issues. It is Rapid Fire Friday and our phone lines are open. If you've got a question, we'd love to hear from you. 610-363-1110. Also, if you just have a comment, if you want to share some of your experience of being a Financial Issues partner, how that may have changed the way that you look at MBA, and how you might be able to encourage others to become a biblically responsible investor, give us a call. We'd love to hear from you. 610-363-1110 is that phone number. All right, let's pick up on the in the know section to get you caught up here. I was almost done. But markets. So last week we had somewhat of a Trump bump. We saw a good week in the markets last week. It was a little bit stifled this week. A little bit of cold blanket or wet blanket thrown on the market this week, at least early in the week, as we got that lineup change in the AI race, where we got the news from Deepseek and some of the initial leaders in the AI race were humbled a little bit. So the race between American and Chinese AI companies will continue as these companies try to jockey to the front position. So far this week, only the Dow is on track to finish the week higher. It is looking to finish about 1% in positive territory. The S&P and NASDAQ are poised to finish down. The S&P down by 0.5 point, and the NASDAQ, which is way more tech heavy, is expected to be or is on track to finish in negative territory, down 1.4%. Now, for the month of January, if we take a little bit longer term perspective, the three major indices are all on pace to end in positive territory. So the S&P is expected to end the month of January up somewhere around 3%, the NASDAQ somewhere around a positive 2%, and the Dow up 5.5%. for the month. The markets are really digesting this latest AI news that came out early in the week pretty nicely, and the market seems to be comforted by the latest read on the inflation data. All three stock indices are expected to open in positive territory on this Friday, with the NASDAQ expected to be up the most, with up over 0.5%, the S&P 500 up about 0.33%, and the Dow up about 20 basis points as an indicated opening. So what's coming next week? Well, next week is Jobs Week. We get all of the most recent jobs data for the economy. That tends to be somewhat market moving in some instances. So we're going to hear non-farm payrolls on Friday. We get the JOLTS report earlier in the week on Tuesday. And, of course, we'll be watching those numbers and bringing you our commentary on what is happening. So now that you're in the know about the recent and upcoming financial issues, we hope that you will learn more about how we can help you integrate those issues into your own stewardship. Find out how you can become a biblically responsible investor and defund darkness with our biblically responsible investing strategy. You can find that at financialissues.org. Phone lines open 610-363-1110. We'll move into the stewardship verse of the day while we're waiting for your call. The stewardship verse comes from Proverbs 22:2. The rich and the poor have this in common: the Lord is the maker of them all. So I think this scripture really encourages us to focus on valuing people in a way that is much different than the world's measure of value. Whether someone has a little bit or a lot of money adds or subtracts zero to their true value or their worth or importance, which is assigned by God. So I believe that the Lord wants us to know that it's not important how much money is in someone's bank account or investment account. What is of major importance is that we recognize that the Lord created us all. This is a principle that casts the valuation of stocks in a whole different light. So, you know, when we're, that's something that goes on in my world a lot. We're looking at the value of companies and different things like that. So does it really matter if a stock has all the characteristics that make it appear to poised to shoot through the roof from a price basis and increase our wealth if we own it, if by owning it, we would be yoked together in business with those who are funding a dark agenda, with those who embrace values that are contrary to the laws and the ways of the God that we profess faith in, and would force us to fund even a little bit of darkness? I think not. It is important to make, is it really important, we have to ask ourselves, to make a ton of money if that money will be used in any way to fund the killing of babies through abortion, or the devaluing of traditional marriage, the promotion of the LGBTQ agenda, or the attack on the family as God intended it to be through abortion, pornography, or the LGBT agenda? We think not. And the good news is that there are plenty of alternatives to having to use companies who don't make culture war funding decisions for you, but rather concentrate on just running a good business, making the best good or service that they can without engaging in the culture war, allowing you to make your own decisions about which values you want to fund. So that's the gist of biblically responsible investing. We're not looking for quote unquote Christian companies. We just want companies to do the best that they can, to operate in excellence, make the best good or service that they can make, return value to shareholders, and then let us deploy the profits where we want to deploy them. What do you think, Seth?
That's awesome. No, yeah, I love that, Shana. You know, as we think about this verse, rich and the poor have this in common, but the Lord being the maker of them all, the thought came into my mind of, you know, when we're in heaven, when we're in glory, or should I say in eternity, whether in heaven or hell, there will be both rich and poor people in this life in both places. Because in the final analysis, it's not about how rich or poor you were that gets you into heaven. It's about whether or not you belong to Christ. And so there's important things when we're talking about value and identity that are so much more important than how much money we have. And of course, like you just said, Shana, here at the ministry, our main goal is to help point you to the gospel and to show you that's what's most important.
Right.
So I hope that can be encouraging for you.
Right.
Yeah.
We're only going to be here for a short time.
Yeah, that's right. Yep. Absolutely.
Be in eternity forever.
Yeah, exactly right. We're not taking any of this stuff with us, by the way.
That's right.
Newsflash.
610-363-1110 is the phone number if you've got a question or you just want to weigh in on some of the things that we're talking about here. While we're waiting for the calls, let's do some Rapid Fire Friday and get to some of the questions that have been coming in.
Yeah, let's do it, Shana. Ed is up first. He's 77 years old. And he asked this question a little earlier this week. He was wondering what happened earlier this week to UT37. Dropped almost 30%. Is it still a keeper or is there some major problem with this company? As always, thanks for the hard work you at the FI team do on a daily basis, Shana. So what's up with UT37?
All right, Ed. So it has a lot to do with what happened with the Deepseek news this week. I think the drop, which, you know, by now it was down almost 30%. Right now for the week, it has recovered. It's only down about 7.5%. So it was sort of a market freak out. The market sold first and asked questions later. But, you know, when the news about Deepseek came out and, you know, there was the thought that maybe China is doing AI better than us. And, you know, I think it really, that for that specific company, it hinged on what they were saying is that they can do it in a much more energy efficient way. So the company in reference is a utility company that is really stands to benefit from all of the electrification that is going to be needed for the data centers and to power AI. So the thought was, well, if it doesn't really take as much energy as we thought, maybe this company is not going to do as well in the future. So this company has had a huge run up since it has been on our buy list. It is still on the buy list. So, you know, I would say that pullbacks could represent a buying opportunity, but only if you're not overweighted. And, you know, my experience, at least for the portfolios that I manage that have this particular company in, there's no room to add to it because for most portfolios, it's probably overweighted because of its huge run up.
Yep, good stuff, Shana. Speaking of UT37, we have another partner. Hugh is 69 years old, and he's asking about UT37. I have 194 shares of it in a traditional IRA, bought it at about $77 a share. I do partial distribution of this account into my Roth annually and pay taxes due. I'd like to transfer all of my UT37 into my Roth because of the tumble in price this week. Do you agree with this? Also, should I buy more of this position either in my IRA or my brokerage account? And if so, now or wait to watch it, and I follow the investment model. What do you think?
Yeah, so this is a great strategy. We have talked about this from time to time. Yeah. It's really hard to do when prices are moving very quickly. So, you know, when we get into a market pullback or somewhat of a prolonged correction, this is a good practice to do. So especially if you're already taking advantage of doing this. And why I think Hugh is doing this is because of tax treatment of the different accounts. So in a traditional IRA, when you grow your money, when it's in an investment like this that has gone up a lot, you're not only growing your own profit, but you're growing your tax liability as well, because you're going to have to pay taxes on this money at some point in the future, even though you're not having to pay it today. So moving it to a Roth where the future tax is eliminated because you're going to go ahead and pay the tax now is a good thing. So when you're in the process of doing that, you want to look at things that maybe have had a pullback in value, or really just your most aggressive pieces of your portfolio, which I think this particular company this week would probably fit the bill for both of those. So as far as should you buy more, I think it alludes to what I said just a second ago. Only if that position contributes less than 3% of your overall portfolio. You just don't want to be super overweighted in any one position. So especially a position like this would, even though it's in the utility sector, this would not be considered a defensive position. It would be considered a high growth type position. So.
Awesome. That's great, Shana.
I think that's all we'll have time to fit in because I hear the music. So if you're listening on an outlet that only carries the short version of the show, we hope that you know how to get the long form, the podcast, the Financial Issues app that you can download on the App Store, or all of the episodes at the website, financialissues.org. For the rest of you, stay tuned. We've got more Rapid Fire Friday to come, and our call queue is open, 610-363-1110. I'm your host, Shana Burt.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
And we're the Gen X.
And we're Samaritan members.
I found out, and I Googled places to abort. We drive there, and as soon as we get there, I open the door, and the first thing that I see is a bunch of Bible verses in the walls. They gave me a little counseling session, they gave me the pregnancy test again, and they do an ultrasound. And that's when everything changed. When I saw my baby, and when I heard her heartbeat, that was it. We decided with my boyfriend at the time, which is now my husband, to continue the pregnancy together. We started coming to the classes, doing our homework, getting counseling together. We've seen the hand of God ever since we stepped into the pregnancy center.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Pharrell came to Crossroads as a fourth grader. His name had been brought to my attention by the school principal. She was concerned about the direction he was heading.
I remember I wasn't the best kid. I got into trouble a lot.
He became a very active part of Crossroads Kids Club.
Mr. Engel, he was the leader that really impacted my life in so many ways. I honestly didn't want Crossroads to end.
We would invite all the students to come to our youth group here at Waterfront.
I felt God saying, come on, come to me. It felt like I was set free.
And I'll never forget the day when we had the privilege and the honor to baptize Pharrell.
I hugged Mr. Engel. I don't know if he understands. I'm truly, thankful to have him through the whole journey. If it wasn't for Crossroads, I probably wouldn't be in the place that I am right now. I wouldn't be a follower of Christ.
Help reach more kids like Pharrell with the hope of the gospel. Visit reachOurSchools.com.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues. Folks, the phone line's open, 610-363-1110. If you've got a question, now's the perfect time to ask it. 610-363-1110 is the phone number. Well, let's get to some more of these questions that have come in on the, and you want to tell people how to, if they're too shy to call, how to get the questions.
Absolutely, Shana. Yeah. So, folks, if you are watching on financialissues.org/live, it's a great place to put your questions in. You can join the chat right there. Also, if you're even a little too shy for that, though, like if you're not a partner of the ministry, just go to the homepage of financialissues.org, and up in the top right corner, there's a Contact Us button. Click that button, and that gives you a little Ask portal that you can put a question in, a general question. You can put your questions in that way, and we'll get those answered too. Also, Facebook, YouTube, and Rumble, you can ask your questions that way as well. So. And speaking of which, Shana, we saw some great comments here in the chat. If you want to ask us about the Tiananmen Square massacre, we can tell you more about it than Deepseek apparently can, because it will censor it. So anyway, just wanted to throw that out there. Let's get back to the questions here, Shana. Sarah is 66, and she's saying, I have an income portfolio. I need a stock in the materials sector. Is it best practice to wait for one of the material stocks that is color-coded blue for income to be added to the buy list? What do you think, Shana, for Sarah?
Well, on the current buy list, there's a couple of stocks that have over 2% yield right now. What I would say about the income portfolio is that not every single position in the income portfolio has to be a blue stock or have a really high yield. I mean, that's kind of the focus for the income portfolio. But growth in income stocks are also good, since you do need some growth, even in an income portfolio. Says here, Sarah's 66 years old. So if you look at average life expectancy, Sarah, you probably got, another 20, 25, maybe even 30 years that you'll be alive and potentially needing income from your portfolio. So with inflation, inflation's run over 20% over the last 4 years. And the antidote for higher prices is price appreciation in a portfolio. So growth. So you still need growth, and I would suggest that you probably are going to need growth in your portfolio as well. So I don't have any income stocks in the materials sector immediately up for consideration for the buy list. Now, immediately means I'm only looking, as far as our next analytical meeting, which is on Monday. So I don't believe that we have any that we'll be discussing at that point. So, it's good practice probably just to go ahead and fill out your portfolio. Don't wait too long. Now, if we get to a point, and sometimes we do, where there are just not very many things on the buy list, that is sort of a signal in and of itself to maybe hold off and wait. But we do have a very robust buy list right now. So I would say you could go ahead and move forward. Because you're managing your portfolio yourself, if you are monitoring the buy list, you will be able to see if and when an income position comes onto the buy list, and then you could reevaluate your portfolio at that time. You could take a look at some of the holdings that you have and see if if a new addition sometime in the future is more appropriate for you than one that you already have. So, I don't suggest turning your portfolio and turning it over all of the time, but that is always an option rather than waiting.
Awesome, Shana. Chris up next here. Chris, 54 years old, and he's in the 45 to 55 model, He says, I'm making quarterly adjusts to bring my materials in the sector just over 1% low. He says, my MA34 is at a 39% loss, and I'm trying to decide to average down and add to the position or just cut my losses and sell. I am about 1% down in the material sector, and I'm looking into one of the material companies that came on the buy list, like MA90, MA85, or MA64. What do you think, Shana? Chris says you guys are all the best, by the way. 54 years old.
Thanks, Chris. We appreciate that. So MA90 is no longer on the buy list, so you can take that one off your sites. As far as MA34, it's a hold. It's officially a hold. It's in an industry that is struggling. So that's the reason that, and it's probably that industry is going to be struggling a little bit going forward. So, I don't know how quickly it will, the price will recover, but the income is still there. Now, going off of your age alone, because that's really just about all I know about you at this point, and which model that you've chosen to follow, MA 64, assuming that you don't already have that one or another one that's like it, that's on our list, might meet your objectives the most out of the stocks that are on there, assuming that you don't already have it. And it is a good mix of growth and income. So if you're more income oriented, though, I would consider keeping MA 34. If you're more interested in growth, maybe you want to cut your losses and get something else. So you are going to be the best person to know exactly what your goals are, but I can tell you in general, it is a hold, especially if you're interested in the income.
Nice, Shana. Lisa is up next, 58 years old. Lisa says, I'm down 50% on CD58. That's CD58. Should I continue to hold this stock? Did I miss a sell somewhere along the way? What do you think for Lisa?
Lisa, you did not miss a sell order. Now, we have a stock that is similar to that one on the buy list in that sector. It is more income focused, but I think probably the worst for that particular company is over with. It is sort of looking like it is stabilized at this point. So, officially, no, it is a hold. I don't think I would consider selling it at this point.
Nice, Shana. Next one up here is David. David is just wondering, why don't we show Inspire, Insight, or Eventide funds?
Well, we are looking at them. So, we have to be certain that those companies do meet our biblically responsible valuation guidelines. And, for the longest time, so Timothy Plan was the pioneer in biblically responsible investing. They were the first, they were the biggest for a long time. There have been a lot of other companies that have entered the space and have really seen some success and may offer good alternatives. So it is something that we're looking into, but we're not ready to make a decision at this point.
Yeah, makes sense, Shana. Gosh, I don't know. It'd be close. It might be better not to rush this next question here, so maybe we could save it for the next segment.
Well, why don't you tell everybody about Bible study?
Yeah, I'd be glad to. Folks, if you missed it this morning, I hope you're able to join us. We were in Daniel 2, verses 19 through 23. Next week, we'll be in verses 24 through 30. We're coming up to that crazy dream, Shana, that Nebuchadnezzar had. That's all I'll say about it. I won't spoil it for you. But yeah, 6:30 Eastern Time, 5:30 Central. If you're a partner also, you can get access to the past Bible studies. Just go to the Bible Study Archives page. And so if 6:30 just doesn't work for you, 6:30 Eastern Time, you can always go back and listen to those. I'd encourage for our partners that we have that option for you too.
Yeah.
But yeah, it's a great time.
There's a great reason to become a partner as well.
There you go. There you go. That's right.
All right. Well, here comes Craig with the Ag Report. After Craig, we're going to take a break, and then we will be back with more financial issues.
This is Craig Haugaard with your Financial Issues Ag Update for January 31st. Corn gave back a chunk of the previous day's gains yesterday as we saw profit taking ahead of this weekend. The week's weekly export sales number was right in the middle of estimates, while the weather forecast for Argentina added in a bit more rain. The biggest news came after the close with a statement by the president reiterating that 25% tariffs are coming on Saturday to Mexico and Canada. How the market reacts to that will determine what prices do today. March corn finished today yesterday 6 3/4 cents lower at $4.90 1/4. Soybeans were also under pressure from fund selling and improved weather forecasts in portions of South America. Speaking of South America, U.S. soybeans are currently priced well above Brazilian beans, and as the Brazilian harvest picks up pace, the export window for the U.S. is closing. We had March beans yesterday down 16.5 cents at $10.44 per bushel. Strong export sales helped sustain wheat futures in spite of negative corn and bean markets. The USDA reported that the U.S. sold 16.8 million bushels last week. That's well above the 9.6 million that we need to average to hit the USDA's annual export projection. Minneapolis March wheat was 6.5 cents higher for the session at $6.20 1/4. Kansas City rose by 8 cents, closing at $5.88 1/4. And we had Chicago 4 cents better at $5.66 1/2. Cotton futures continue to drift lower. At the closing bell, March was down another 39 points at 66.27. Livestock futures were mixed. April live cattle were $3.45 lower at $201.50 per hundredweight. March feeder cattle dropped by $2.07, settling at $273.20 per hundred. And April lean hog futures were 60 cents better, closing at $91.92.5 per hundredweight. Constitute milk futures had a pretty lethargic session. At the closing bell, February futures were 8 points better at $20.42. This has been Craig Haugaard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.
It's up to us to stand up and say, enough is enough. All of this unbiblical stuff that's going on, whether it's abortion or transsexual or LGBTQ, widespread pornography, human trafficking. Bottom line, it's still up to us. If we stop investing in these corporations that are trying to destroy us, sooner or later they're going to wake up.
To learn more about biblically responsible mutual funds and ETFs, go to timothyplan.com.
I found out I was pregnant when I was 21 years old. For me, I was scared, I was shaking. They do an ultrasound. And that's when everything changed. When I saw my baby and when I heard her heartbeat, that was it. We've seen the hand of God ever since we stepped into the pregnancy center.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
What separates Crossroads Kids Club from other ministries to reach school-age children? What sets you guys apart?
First of all is our connection with local churches. We mobilize, equip, train, support local church partners. We're right inside the schools. There's a number of ministries that try to serve public school children outside of the school, but we're able to be right there on the campus. Another key thing is just our values. Our highest value is actually relationships. And so we're not a ministry that's driven by a lot of fancy technology or flashy stuff, but rather getting adults who love Jesus and who love kids to sit on the floor with a group of kids, to listen to them, to love them. So I would say the relational emphasis and the simplicity of the model is actually something that makes Crossroads special as well.
Help reach kids with the hope of the gospel. Visit reachOurschools.com.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to Financial Issues. Phone lines are open. You've got just a short time to get your phone call queued up. 610-363-1110. I think we got some questions in the chat.
Yes, we do, Shana. Social? Absolutely. We've got this first one here comes from Joe. Joe is asking from Virginia, and he's saying, typically I've followed reinvesting dividends from mutuals and ETFs and retaining dividends from individual equities for reinvesting at my discretion. Is this a sound strategy to follow for preferreds, financials, and REITs?
Okay, so I think what Joe means is that should he not reinvest the dividends from his preferreds, financials, and REITs? And if that's the question, then yes, that's what I would do. I would reinvest the mutual fund dividends and capital gains, but as far as the dividends from the other stocks, I would set them to just pay into your cash, because that way you get to make, as Joe said, you do get to make the reinvestment decisions. You get to redeploy that money as you see fit. So yes, that's what I would do.
Yep, very good. Judith from Texas is asking about F11. Shannon, do you think F11 would perform better long-term versus F45 for income?
So I think if you're looking for just income, I would go with the higher yielding one, the F45, I believe is the call number. It has a much higher dividend rate, and that's because of the way that it's structured. It is a BDC company, a business development company, and that's just by nature. They have to pay out a certain amount of their returns. So I wouldn't expect much, if any, growth in the F45. Sorry, I have to keep looking at the number. As I would in the F11. But if you're looking just for the income, I would consider the F45.
Awesome. And Shana, real quickly, I know we had talked about this, Lisa's question in the last segment, that call number's changed to CD45. So for Lisa, if she's wondering about that.
Yes. Yep. So sorry. We are preparing to launch the new website. So trying to get things cleaned up and, so occasionally the call numbers will change, but and I'm glad you pointed that out, because if anybody's looking for it today, we want them to be able to find the right number.
Yep.
All right, let's get to Rob. Rob's calling from Texas. Hi, Rob. You're live on Financial Issues.
Quick today. I have a question about, we have some annuities that have a roll-up time and so forth. We've kind of peaked out on that. But my wife's and mine were bought out of retirement funds, so qualified money went into it. We had to take an RMD. And hers requires an RMD because she doesn't have any other qualified money to pay out her RMD. So anyhow, the question is, she's getting like $6,000 RMD out of it, leaves a little bit into gain on it. At current bond rates and so forth, would this be a good time to just start taking payouts on it?
To start taking the RMDs or to start?
Well, we are taking the RMDs. We've done that 2 years now. And now that the rates at current bond rates, is this a good time just to start taking out payments on it? Would it be more advisable to just start taking the payouts and go that way, or just take the RMDs and let it roll?
So I think bond rates have probably the least amount to do with it. What I would consider is how much money do you have in qualified accounts, and what do you think tax rates are going to be in the future? For a long time, I believe that tax rates are going to be higher in the future than what they are today because of the debt that is accumulating in the United States. And but things are changing a lot with President Trump. He's even tossing around the whole idea of doing away with the income tax, which would sort of be a game changer. So what I would look at is the most efficient way of getting money out of your qualified account. And so if you do giving, I would consider doing qualified charitable distributions first and foremost to get money out of that account, because that's the only way that you right now can get money out of your qualified accounts without paying any taxes on it. So the way that you do that is you identify a nonprofit 501c3 organization that you want to give to. You give directly from your IRA annuity, in your case, annuity account, to the nonprofit organization, and then you make sure that you report it correctly on your tax return. Report that even though, on your 1099, it's going to show all of the money that you took out of that account, but then you have a chance to say, well, some of this is not taxable because it was given as a qualified charitable distribution. So I would consider doing that first, and then if most of your liquid net worth is concentrated in a pre-tax account, depending on what your current tax rate is, I would consider moving out more of that money. And then you also want to take a look at what are the other options. I mean, annuities are so complex and they're so different across the board. I have no idea what your contract says, what the cost of the contract are. Those are the things that I would look at, because annuities come with certain guarantees, and it's really one of the only times in the investment world that you can legitimately use the word guarantee. But it's my understanding that most people don't really understand what is guaranteed, and the guaranteed comes at a cost. So there is a cost for the annuity. You will probably see that, on your statements. And so what you have to weigh out is the guarantee, do I understand the guarantee that I have? Because a lot of people just assume, guarantee, now I can invest in things that are variable and I'm guaranteed not to ever lose any money. But that is most often not at all the case. And in my almost 25 years of being in the investment industry, what I find is that people, once they understand the guarantees that they have, they really start to question how much they're paying for those guarantees. So the cost that you're paying for those guarantees is going to limit your return on your money. So then you have to look at too, is it better to stay in the product with the guarantees that I have, paying the cost that I have, or is it better to invest that money outside? So, bond rates, I'm not sure how that really is a huge factor weighing in on this. I think that the other considerations are more important.
Yeah, usually they have a payout related to the bond rate, I think they're kind of where they're going to be for a while at about 4%-ish. But at any rate, that's part of this payout thing.
So is it a fixed annuity?
Yeah.
I got you.
Okay. That helps me process this. I'm also I have most of our money in a SEP IRA, and I've got about half of it out. Actually, more than half. I'm now in the taxable side. I have a transfer on death account with Fidelity, and they're both on Fidelity. I put out about 3 or 4 times what my RMD is annually to stay in a 22% tax bracket. Basically, I've been trying to move money out for about 6 years, and so anyhow, it's happening, and I'm getting, and some of your advice, getting the things that don't increase over on the SEP side has been helpful too. So that's good. So, at any rate, it's a process for sure. I wish I had more Roth money.
I hear you, don't we all? Well, thanks for calling, Rob. It sounds like you're doing a great job with the strategy. Keep up the good work.
Yeah, keep it up, Rob.
I just rebalanced the portfolio yesterday, and I sold one that was up. Some of my shares are up about 2,000%. I figured I'd probably not get that on my dividend. So I'm balancing it out. I just is on my mind because January is when we're thinking about doing. We have a fellow that helps us on that too. I wanted your opinion. I appreciate you very much. Thank you.
Great. Thanks, Rob. We appreciate that. Sharing that.
Appreciate it, brother.
That testimony with us. And sounds like it's going good for Rob. He's been doing it for a while. And so, folks, I hope that motivates you to check out our strategy as well. You can find it at financialissues.org. We hope that you'll become a partner. It's only $132 a year. That's you become your videos to help you get started and follow our asset allocation models. And I say it's a great bang for the buck for sure.
Yeah, absolutely.
All right. Well, I don't know. I don't think we have time to get to
I don't think so. Boy, I'd love to, Shana. I feel adventurous, but probably for the sake of our listeners, it's best not to as the bumper music comes in.
Yep. All right, good. Well, folks, we want to remind you every day that the Master's coming back. There's going to sound a good and faithful steward with everything that the Lord has trusted you to manage. So we hope that you will come back again next week. You'll catch up on the shows that you've missed by going to our website, financialissues.org, or catching us on podcast or the phone app. have a great day of worship this weekend, and come back next week for more financial issues. I'm your host, Shana Burt. Have an awesome weekend.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.